Welcome back to the Pro Ticker Podcast. It's Tuesday morning, and you know what that means. We're diving headfirst into those major financial magazine headlines. And let's be real, the markets are still kind of freaking out about Trump back in the White House. It's been a wild ride so far. So we've got a whole stack of articles to get through today, ready to figure out what a second Trump term could mean for your wallet.
You bet. Definitely a fascinating time to be watching the markets, that's for sure.
No kidding. Let's start with, well, the elephant in the room. Or maybe we should call it the Bitcoin in the room, huh? Bloomberg's reporting that Bitcoin just hit a record high. We're talking pushing past $89,000. And the whole crypto market, it's like it's reliving its glory days, surpassing that pandemic-era peak.
Yeah, and what's really interesting here is that this isn't just some random surge. Bloomberg also pointed out how this is directly tied to Trump's, whole pro-crypto stance during the campaign. All those promises about friendlier crypto regulations. Remember that strategic Bitcoin stockpile he talked about? And the boost for domestic mining? Well, it looks like investors are taking him at his word.
Yeah, it's like that Dogecoin to the moon thing, but with way more money on the line this time. But is this Bitcoin bonanza for real, or are we looking at a classic bubble about to burst?
Honestly, that's the million-dollar question. Katie Stockton, she's a technical analyst over at Fairlead Strategies. She's saying things might be getting a little too hot in the crypto market. CNBC quoted her recommending a short-term neutral bias, which basically means maybe tap the brakes a little.
All right, because what goes up must come down, as they say. Okay, so while Bitcoin's having a party, things across the pond are a little less celebratory. CNBC is reporting that the European market is not exactly thrilled, that pan-European stocks, 600, big index tracking 600 major companies across 17 European countries, it's down, and mining stocks are taking the biggest hit.
Yeah, and when you look at the bigger picture, it makes sense. All of Trump's talk about protectionist policies, especially those tariffs, is making European investors pretty nervous. They're worried about what it could mean for trade, for economic growth, the whole shebang.
And it's not just investors who are feeling the pressure. Bloomberg highlighted how the ECB, the European Central Bank, they're getting a lot more serious about geopolitical risks under their new leader, Claudia Bush. They're going to be demanding more info from banks about how exposed they are to things like trade wars.
Yeah.
Which could mean tighter regulations, maybe even less lending.
Yeah, it definitely signals a shift in how European regulators are looking at risk.
Yeah.
The global landscape is starting to feel a bit shaky,
For sure. So we've got Bitcoin going crazy, Europe feeling anxious. What about the U.S.? What's happening on our home turf?
Well, CNBC pointed out that the U.S. dollar is getting stronger, which is pretty typical when Trump's in office. They call it a Trump trade.
Okay, so strong dollar, that's usually good, right?
Well, it depends. Barron's had this interesting article about how, while Trump's policies could be good for some sectors, they might make things tricky for the Fed. Tax cuts and tariffs, those could actually lead to fewer rate cuts, which would be a surprise for a lot of investors.
That's a really good point. A lot of people are counting on those rate cuts to keep things rolling. If Trump throws a wrench in the gears, it could have a ripple effect on everything.
Exactly.
Speaking of investors, let's talk about the OG, Warren Buffett. The Wall Street Journal reported that his company, Berkshire Hathaway, they're sitting on a mountain of cash, like $325 billion.
Wow, that's a lot of cash.
Right. They've even stopped buying back their own stock, which usually means they see a better opportunity somewhere else.
So, what's Buffett thinking? Is he worried about something? Or is he just waiting for the perfect moment to make a big move?
That's the question everyone's asking. But whatever he's up to, it tells you that even the Oracle of Omaha is being cautious in this crazy market. Now let's zoom out a bit and look at what's happening globally.
One of the big things to watch is China's response to all of this. Bloomberg explained that they might counter Trump's tariffs with their own measures, things like stimulating their economy or weakening their currency, the yuan.
So are we heading for another trade war?
Yeah.
Because the last one wasn't exactly fun for anyone.
No,
really.
it wasn't. And Bloomberg did a survey of economists, and they're saying China might target U.S. agricultural products with retaliatory tariffs. Things like soybeans and beef, which could hurt American farmers and businesses, and even drive up prices at the grocery store.
Ugh, nobody wants that. It feels like we're watching a high-stakes poker game, and with Trump back in the game, the stakes just got even higher.
So what does all this mean for the average investor, for someone like you listening right now? Well, that's what we're here to break down. One thing we need to keep an eye on is inflation. Barron's was highlighting how Trump's policies could really make inflation worse, and that can eat away at your returns without you even realizing it.
Right, because even if your investments are doing well on paper, if prices keep going up, your money doesn't go as far. So what are smart investors doing to protect themselves from this potential inflation bomb?
We're seeing a lot of people turning to assets that are considered hedges against inflation, things like gold and real estate. They tend to hold their value or even go up in value when inflation's rising.
Okay, so it's like finding a safe haven from the storm. What about bonds? How are yields reacting to the possibility of higher inflation under Trump?
Well, bond yields and inflation, they kind of have this dance they do. When inflation expectations go up, bond yields tend to follow. It's because investors want higher returns to make up for the fact that inflation's eating away at their purchasing power. And we've already seen some upward pressure on yields since Trump's election, which tells us that the market is definitely factoring in the potential for a hotter inflationary environment.
So it sounds like investors are buckling up for a potentially bumpy ride. But it's not just investors who need to be thinking about this, right?
Definitely not. Businesses are also feeling the pressure and trying to figure out how to handle rising prices. We're seeing companies reviewing their pricing strategies, renegotiating contracts, and looking for ways to become more efficient to keep costs down.
It's a good reminder that inflation affects everyone, from the person buying groceries to giant corporations.
Absolutely.
It's going to be a key factor shaping financial decisions for a while.
Yeah, for sure.
It's amazing how intertwined politics and finance have become. It seems like every political event has an immediate impact on global markets.
It's always been connected, but in today's world, it's even more obvious. Political events, especially something as big as a presidential election, can trigger huge shifts in investor sentiment, and that leads to volatility and uncertainty in the markets.
And with someone like Trump, who's known for being, shall we say, unpredictable, it seems like this back and forth between politics and finance is going to keep getting more dramatic.
Definitely.
So let's take a minute to recap what we've learned so far about how the markets are reacting to Trump's return.
We've got Bitcoin hitting record highs because of hopes for a crypto-friendly administration. But European markets are nervous about trade wars and protectionist policies. The US dollar is getting stronger as investors look for a safe place to put their money, and even Warren Buffett is sitting on a giant pile of cash, maybe waiting to see what happens next. And then there's inflation looming in the background, a big concern for investors and businesses alike.
Yeah, that's a lot to take in. It's like trying to solve a puzzle where the pieces keep changing shape.
It is. But staying informed, being flexible, and making smart decisions is more important than ever in this kind of environment.
Totally agree. Before we wrap up this part of our deep dive, I want to touch on something we haven't talked about directly yet. The potential impact of a second Trump term on global economic stability. We've seen how the market is reacting in the short term, but what about the long game?
That's a great question, and it's one that analysts and economists are going to be debating for a long time. There are so many factors to consider. Trade relations, fiscal policy, geopolitical tensions, the overall global economic outlook. It's a complex situation with no easy answers.
Yeah, it's like trying to predict the weather months in advance. You can look at the patterns, but there are always those unexpected things that can throw everything off.
Exactly. But one thing's for sure, Trump's policies will definitely have a big impact on the global economic landscape, and his actions will probably shape the global economy for years to come. Investors and businesses need to adapt to this new reality, and it's likely to be full of twists and turns.
So no guarantees, but what we can say is stay informed, think critically about what Trump's presidency could mean for the global economy, and try not to panic.
Great advice.
We'll be back with more insights in the next part of this deep dive.
Absolutely. We'll dig deeper into some of these issues and explore how they might affect you and your investments. Stay tuned. Welcome back to our Pro Ticker Deep Dive.
All right, so we've talked about Bitcoin going bananas, Europe feeling a little shaky, and the US dollar flexing its muscles. We even peeked into Warren Buffett's vault, which is basically overflowing with cash. But there's one more big piece of this puzzle we need to talk about, and that's inflation. Barron's was pretty clear about this, warning that Trump's policies could really send inflation soaring. And for you, the listener, that means your money might not stretch as far, even if your investments look good on paper.
Yeah, it's like you're running on a treadmill, you're putting in the work, but not really getting anywhere. And it's not just about your everyday spending. Inflation can really mess with your long-term financial plans, too.
So what are smart investors doing to protect themselves from this potential inflation roller coaster?
Well, we're seeing a lot of interest in assets that are considered hedges against inflation, things like gold and real estate. Historically, they tend to hold their value or even go up in value when inflation is running hot.
That makes sense, like finding shelter from a storm. But what about the bond market? How are yields reacting to the possibility of higher inflation under a second Trump term?
You know, bond yields and inflation have this interesting relationship. When inflation expectations rise, bond yields tend to climb too. It's because investors want to be compensated for the fact that inflation is eroding their purchasing power. And we've already seen some upward movement in yields since Trump's election, which suggests the market is anticipating a hotter inflationary environment.
So it seems like investors are starting to factor in this potential inflation roller coaster. But it's not just Wall Street that needs to be paying attention, is it?
Oh, absolutely not. Businesses are also feeling the pressure of rising prices and taking steps to try to mitigate the impact. We're seeing companies rethinking their pricing strategies, renegotiating contracts, and finding ways to be more efficient to keep costs down.
It's a good reminder that inflation touches everyone, from the everyday consumer to massive corporations.
Couldn't agree more.
It's going to be a major factor shaping financial decisions for the foreseeable future.
For sure.
And speaking of the future, let's shift gears a bit and talk about a topic that's been on everyone's mind: climate change. There's been a lot of debate about Trump's stance on environmental regulations and how that might impact global efforts to address climate change. It's a huge concern, given how urgent the situation is. We know from scientific reports, and frankly, from what we see happening around us, that climate change is a real and present danger.
Absolutely. And Trump's history of skepticism towards climate change and his rolling back of environmental regulations during his first term are causing some serious anxiety. His return to office has raised concerns about the future of global climate action and what it means for investments in renewable energy, sustainable practices, and even for the global economy as a whole.
It's a complex issue with far-reaching implications,
Mhm.
and it's going to be interesting to see how this plays out during his second term. Now, let's rewind for a moment and compare how the market is reacting to Trump's victory this time around versus his win back in 2016. Are we seeing similar patterns, or are there some notable differences?
Well, there are definitely some echoes of 2016. We're seeing a similar surge in the US dollar and strength in certain sectors that are perceived to benefit from Trump's policies, like energy and defense.
So a bit of déjà vu then.
In some ways, yes, but there are also some key differences this time around. For instance, the market's response to Trump's trade policies seems more muted, perhaps because investors have learned from the past and are taking a more cautious approach.
Right, they've seen how quickly trade wars can escalate and the potential damage they can inflict on global markets.
Exactly. Experience often leads to more measured reactions. Investors might be waiting to see concrete actions from the Trump administration before making any big moves.
So while there are some familiar themes, there's also a sense of wait and see in the air.
I think that's a good way to put it. The world is a different place than it was in 2016, and the market is reflecting that in its more nuanced reaction.
For sure. Now, as we wrap up this segment, I want to touch on something we haven't discussed yet, but is incredibly relevant to you, the listener, and that's the potential impact of a second Trump term on globalization. We've seen a rise in protectionist sentiments in recent years, and Trump's America First agenda seems to align with this trend.
That's a crucial point. Globalization has been a driving force in the global economy for decades, but it's facing increasing scrutiny and skepticism. Trump's policies could potentially accelerate the shift toward deglobalization, with far-reaching consequences for trade, investment, and economic growth worldwide.
It's like we're at a crossroads, and the path we choose will have a profound impact on the global economic landscape.
Exactly. It's a complex issue with no easy answers, but it's something that investors and policymakers need to consider carefully as we navigate these uncertain times.
It's all about making informed decisions and being prepared for whatever the future holds.
Couldn't agree more. Staying informed and adaptable is key in this ever-changing world.
Well said. We'll be right back after a quick break to continue our deep dive into what a second Trump term means for the global economy and your investments.
Welcome back to our Pro Ticker Deep Dive.
All right, so we've covered a ton of ground today: Bitcoin, Europe, inflation, climate change, even Warren Buffett's Scrooge McDuck vault of cash. But as we wrap up, I want to go back to something we talked about earlier, the whole globalization thing.
Yeah, that's a big one. Definitely deserves a closer look. It could have huge implications for the global economy. Like I said, there's this rising tide of protectionism worldwide, and Trump's America First agenda kind of feeds into that.
Right, and if you think back to his first term, he wasn't exactly shy about using tariffs and trade deals to try to reshape global trade in a way that he thought benefited the U.S. So what does this mean for globalization going forward?
Well, some analysts think Trump's policies could actually speed up the whole, unraveling of globalization as we know it. They're saying his focus on bringing manufacturing back to the U.S., reducing reliance on foreign trade, all that, could lead to a more fragmented global economy, like countries becoming more self-sufficient and less interconnected.
So instead of this free flow of goods and services across borders, we might see more regionalization, countries doing more business with their neighbors or within their own blocks.
Exactly. And that could have huge consequences for businesses, investors, even consumers. We could see disrupted supply chains, more expensive goods, maybe even slower economic growth in some parts of the world.
It's like pulling pieces out of a Jenga tower. You never know which one's going to make the whole thing collapse.
Yeah, great analogy. And that's the thing. There's so much uncertainty around this whole issue. No one really knows how it's going to play out, but it's definitely something to watch closely.
Okay, so for our listeners out there, the people trying to figure out what all this means for their own investments, what's the bottom line?
I think the key takeaway is to be aware of the potential risks and opportunities. If you're invested in companies that rely on global supply chains or that do a lot of business overseas, you might want to think about how they could be affected by trade barriers or geopolitical tensions.
And on the other hand, there might be opportunities for companies focused on domestic markets, or ones that are well-positioned to benefit from a more regionalized economy.
Exactly. It's all about being adaptable, doing your research, and making decisions based on your own risk tolerance and investment goals.
That's great advice. And it just highlights how important it is to stay informed about what's happening in the world, politically, economically, the whole picture.
Absolutely. Knowledge is power, especially when it comes to navigating these crazy financial markets.
Right. Couldn't have said it better myself. Well, we've reached the end of our deep dive into the financial headlines. Hopefully you've got a better understanding of what a second Trump term could mean for your wallet and for the global economy. It's a time full of uncertainty, but also opportunity. And we'll be here to help you make sense of it all as things develop.
We'll keep bringing you in-depth analysis and different perspectives on the biggest financial news so you can stay ahead of the game.
That's right. We'll see you all tomorrow morning with fresh headlines from the financial world. Until then, happy investing.